start with this. So, it is not a recession unless it comes from the recession region of France. Otherwise, it's just sparkling misery. So I love that so much because there's such a debate right now, whether are we in a recession? Are we not in a recession? It's just really hard to tell. And historically, it's been the two negative quarters of GDP, which we've had now officially, but suddenly we're debating whether that's real or not. And really, it doesn't matter because at the end of the day is we have to do what the data is telling us. What is the market saying we need to be doing? Are we going up? Are we going down? And usually by the time we understand it's in a recession, it's too late anyway. So we're kind of in this interesting mid-cycle area where maybe we've had it and maybe it's over, but maybe we've got another one coming or maybe another leg coming. There's a lot going on here that's a little bit unusual. And really the last piece that is a fair argument to why we may not be in a recession is that unemployment hasn't risen as it normally does or should. So usually that's the final piece of the puzzle, but it's not happening yet. But there are a lot of things in play and that are going on that could make that an issue in the future. All right, the long-term trend here, it had been stalling out right at our 50-day line as it did there, but then it broke through. So we actually removed our hedges and we're actually caught a lot of this. But now we're back in a place where that may be interesting again. So we're watching this very closely. But the last couple of weeks have been okay. It's starting to feel better, but every time that happens, usually the market turns around and gets ugly again very quickly. So we're definitely watching that. And of course, there is a primer video on all the details of what these charts are. So you can go watch them on YouTube because I don't always do a full explanation of what these charts are. So you can go there and get the full explanation. Our money flow indicator has been backing off, even though the market's been going up, it's been backing off. Been pretty strong since was at the end of mid-July, and it kind of stabled. We had that last little run I was talking about, and then it's been backing off. And this last little jump up, yesterday was a pretty good day, but money flow didn't really back up something sustained. So I'm really curious to where we go from here. And even this morning, we were up quite a bit, and now we're not very much, at least not in the NASDAQ. It's been back and forth between positive and negative after being up almost 1% this morning. So it's still volatile out there. Volatility tends to happen in a bear market. So we're still seeing signs that things are a little bit ugly. Our sectors are positive, 10-1. Energy is the weak sector right here. Our side, strength is good, MACD is good, but it's starting to move over. We're starting to see things go that way, even though we have a lot of sectors trending positively. If you look at the rotation chart, which I didn't have with me today, is that they've all pushed into leading and now they're kind of falling back into where they might start lagging in the very near future. Usually that's how that cyclical motion tends to happen. So right now we have the trending positives are the financials, the industrials, technology, consumer staples, interesting, real estate, also interesting, utilities, and healthcare. And a lot of those are really the more defensive places to be. We want to see, consumer discretionary be running. Technology is a good one. Energy can usually run in a high volatility environment, as well as communications. So communication is also like the Facebooks and the tech and whatnot. So they're all there, but they're doing okay for now. But again, we're watching very closely and seeing when this might start to slow down and have a problem. I don't normally show bonds, but similar thing is they've been going positive after being negative for months. They've just stayed stuck in that negative place, and still the long-term treasuries are there. The TLT is the 20-plus year U.S. government treasury. It's having a tough time. It's rolling over again. Not a great sign. Usually, historically, when the stocks are falling like they did in this first half of this year, these bonds should be going up. The treasuries, secondarily, IEF is the 10-year treasury, which is doing better than the 20, but that should be going up when things are going down, but it's not. We've really had a disconnect between what's normally a risk-on asset versus risk-off, but it's just not working that way. And this is the first time we've seen the ag on this side months, so it's nice to see that. This is convertibles. High yield is probably the most interesting thing, and this is what we've been buying into the most. We have it both in our bond model and our equity models. We have high yield exposure, and that's really where we've focused. It's a little more equity based in how it moves. If the stock market's going up, high yield is going to go up too, and it typically will lead the market as well. So if high yield's doing well, then everything else is probably doing okay too. So if we start seeing these treasuries roll over, or like this, the aggregate with negative 3 days in the MACD, if that continues, it's possible that the high yield bonds will stay positive for a while. So we'll have to watch that for that, and we'll see where it goes. The final thing on here is mortgage backed. Those have been just killed and crushed this year, but there's a little bit of signs of life here and there within that sector. So we'll have to see where that goes. It's another positive for the environment getting back to normal, but there's still headwinds, so we'll see. And lastly, I'm going to show you the S&P with this trend line here. What's been interestingly is around this 42, 41, 80 has really been support back here. It was support, and then it broke, and then it became resistance, and then it became resistance again. And we may be breaking through it, or maybe we're failing. It's hard to tell where we are here, but so far, if we break this and hold this blue line, we could see the next move up, and that could be pretty good. So we'll have to see where that goes. So that's really all I have for this month. Certainly go catch the primer video if you wanted to know what some of these charts are a little more in depth, and we'll catch you next time.